Well, joining us now for more on that is Casper Wolski from FIIG Securities. Casper, good morning to you. Thanks for joining us. Markets certainly do seem to be reacting positively, but take us through how you're interpreting all of these Greek developments.
Yeah, I mean, markets are certainly following what's happening in Greece. I think that's driving everything. Further optimism overnight. We saw Greek bonds rally. Yields down to the tune of about 49 basis points, and there's really a risk-on theme. Overnight, we saw equities up across the board, as you were just mentioning, but yields otherwise pretty flat in Europe, and yields in the US up about 4 basis points. That was on the back of some more Fed speak about some rate hikes toward the end of the year. But all eyes are really on Greece at the moment.
It certainly is, and you do mention some of the positive developments on markets, but I guess in the long run there is still a lot of uncertainty there, and the bottom line is that we still haven't seen a deal being reached.
That's right. So I mean, both sides of the table are finally on the same page in regards to a resolution in Greece. We haven't seen that for a while, but there's still a lot of downside risk there. We're finally coming to an agreement, but first of all, the Greek Prime Minister needs to get changes through Greek Parliament, and we're already seeing some of the lawmakers there saying that they're going to reject any proposal, given that they were really voted in on the basis of anti-austerity. So there's some challenges there, and once we get through that, then any proposals need to get through German Parliament and get the tick of approval from the rest of the Euro group. So we'll be following that closely, but still some downside risks and definitely under a lot of time pressure.
We know that, as you mentioned there, movement in bond markets overnight and really this week have been driven by Greece. What's been the general trend in bond markets over this week?
Yeah, I mean, domestically here yields are set to open about 3 basis points higher. But I mean, over the last few days and say a couple of weeks, we've really seen volatility spike. A lot of uncertainty following Greece, and it's all driven by that by the news over there. As a result, we're also seeing liquidity dry up as people are a little bit uncertain about markets. Interestingly, we're continuing to see that steepening of the yield curve. Short-term bond rates here are sort of locked in by the RBA cash rate and expectations of what they're going to do later in the year. But we're seeing the longer end spiking up, and the difference between, say, 10 and 3-year bond rates is now up over 1%, and that's continuing to steepen. We saw that differential there get to as low as about 42 basis points only in February.
We know that bond markets have experienced extreme volatility over recent months or so. How are you seeing issuers placing themselves given current volatility?
Yeah, I think issuers are a little bit on the sidelines at the moment. With all the volatility in yields, they're getting a little bit concerned about mispricing their own bonds, and with the market generally being better sellers of bonds at the moment, there's also that risk of issues not being absorbed by the market. So leading up to June 30, I think a lot of issuers are now going to postpone any issuance into the next financial year, and once we do see the situation settle down in Greece, we'll probably see a lot more volume in the new issuance space.
Fantastic. Casper, we'll leave it there. Thanks so much for joining us this morning.
Good morning.